Okay, welcome to today's class tutorial. On today's topic will be market structures. Okay. Now, understanding market structure is very important because it gives you a sense of direction as to where the market is going. If you know where the market is going, you can anticipate where market will end or where market will reverse, which means it will improve places that you target as take profit. So your profit does not reverse on you. You know places where you expect reaction so that you know whether you take an entry. It's very important to know where something is heading to. It's like when you are traveling and you have your directions. You know what train to take, what bus to take, because you know where it's heading to. It's going to be a lot easier and make you a lot more precise. Okay. So, market structures. The first thing that you have to know about market structures is a break of structure. Break of structure, BOS. For you to understand what break of structure is, you have to understand the characteristics of trend. What are the characteristics? First of all, there are three types of trend. There is the uptrend. There is the uptrend. There is the downtrend. And the third one is sideways trend or ranging trend. These are the three types of trend. Now, let me give an example. Okay, let me give a textbook example of these types of trend. In an uptrend, you have, let's say this is your starting point. You have a point. It's moving. Okay, sorry. Let's not go far into it. Let me delete. For you to understand, for you to be able to identify what trend is going on, you need to understand the characteristics of a trend. Okay, so the characteristics of a trend. Characteristics of a trend. The characteristics of the trend is that trends are made up of peaks or high, peak of a mountain, and troughs are lows. Okay, that is the first characteristics of a trend. The second one is okay, let's just leave it like this. This is the basic characteristics of a trend. Trends are made up of peaks, highs, and trough lows. Okay, let me get this so we'll see it clearly. Since I'm using portraits, I have to optimize the space usage. Now that you know characteristics of a market trend, the next thing to check out is how do you determine whether it's an uptrend or a downtrend. Now, the thing is to watch out for the peaks and the trough. That is to watch out for the highs and the lows. Whether these highs and lows are moving up, down, or sideways. So let me give an Let me give a textbook example of an uptrend. We have already covered this, but this is just to refresh your memory. If I wasn't doing this video would be a lot shorter and precise. So we have a starting point. As with the first one, there just say that is the starting point. It created a peak. Now there is a trough, which is the low. I'll be using high and lows. Okay. So this point here, let me mark it out for you. This point here is the peak that was created in this uptrend, okay? And these points here, okay, it's not yet complete, sharp. Let me take this out. Yes. Okay, this is the ideal uptrend. These, let me mark out all the peaks so that you can see them, just like mountain peaks. These are the highs created during this uptrend. Okay, these are the highs. You notice that the highs, the new high is higher than the old high. The new high is higher than the old high. So those are the highs of an uptrend. Now if the new high is higher than the previous high, that means we are in an uptrend. But that is not just all you need to know. They have to work in hand to hand with each other. The highs and the lows have to work hand in hand with each other for you to confirm what trend we are in. Now for the lows, the lows have to work together with the highs for you to determine what trend we are in. In an uptrend, the new lows have to be higher than the old lows. Okay, so this is the first one. This is a higher low, and the new low is another higher low in comparison to the previous low. Okay, this is a textbook representation of an uptrend. Now let's do a textbook representation of a downtrend. A downtrend. As we have already established that trend, there are characteristics of a trend, and trend are made up of high and lows. For you to spot what trend it is, it depends on whether those high and lows are moving up, down, or sideways. So let's imagine that this is the starting point of a trend, creates a low, creates a high, creates a new low lower than the first low that it has created, creates a high that is lower than the first high it has created, creates a new low lower than the previous one, creates a high, creates a new low. Okay, this is a classic textbook example of a downtrend. Now, characteristics, like we said, whether the high and the lows are moving up or down. So first of all, this is the first low you notice. Okay, that is the first low you notice. Then the second low you notice is lower than the first low. At this point, you can safely say it's a trend forming. It's a downtrend because the next low is lower than the previous low. Okay, so you can safely say that this is a downtrend, and you will not be wrong because you know what you're talking about. Okay, now high and lows have to work together for you to be certain. Now you check the highs. This is the first high that you noticed. Then the second high is lower than the previous high. Then the next high is lower than the previous high. So you can see that the high and lows are moving lower in this situation. So you can safely say that this is a downtrend. Okay, so what happens in a sideways market or ranging sideways or ranging market. In a sideways or ranging market, it has a range. Let me use these two. Why is it called sideways or ranging? It doesn't move up or down. The peaks, and that is the high and lows, are within a specific range. This is it. It's almost like the market is just moving sideways to the right. Okay, it gets here, it creates a peak, okay, and it creates a low, but then it doesn't create a higher high and it doesn't create a lower low. This happens from time to time. It's moving to the right side. This is what we refer to as sideways or ranging market, because the lows and the highs are not moving higher or lower. It's just there. Okay, but now in market structure, your ability to identify what the trend is very important. It helps you to know, anticipate, or it improves your prediction of the market. Understand that in forex trading, you need a lot of confirmations, because you're dealing with real capital. It's not play, it's not fun. It's work, it's supposed to be work. So you would need more confirmation, and more confirmations means you have to be very careful in your analysis so you don't lose. So the next thing we have to talk about is break of structure. Break of structure, BOS. Break of structure, BOS, in as initials. Okay, so what do you mean by break of structure? When you hear break of structure, your mind easily goes to, okay, this is the structure, and then there's something that is breaking it. It's not supposed to be that complex. It's basically just what it is. There's an established structure and there's something that is breaking it. Now in market structures, these structures are not bricks and walls. These structures are candle movement. There are price actions. What do we mean? We have established that if market starts here, moves like this, this is just price printing structures. Okay, this is just price printing structures. Okay, these are what it means when you are talking about structures in the market. Just price printing out a pattern. Now, for us to understand what break of structure is, we have to identify a structure for us to say, okay, the structure has been broken. We have already spoken about uptrend, downtrend, ranging. Okay, so let's say a market is moving. That is the starting point. It moves like this, moves like this, moves like this, moves like this. Now we are beginning to notice a high and low, and each new high is higher than the previous high, and each new low is higher than the previous low. We have identified the particular structure that the market has printed for us, which is what? An uptrend. Okay, so now what do we now call break of structure? Structure is when markets produces something like this. we have our high, we have our low, we have our higher high, we have our higher low, we have our higher high, we have our higher low, we have our higher high. Normally, price action is structure. Now, for break of structure, let's start marking it out. This is our high, okay, and the price was broken. The new high broke the old high, okay. We mark it as our break of structure. The new high broke the old high. Now this is the next one. We'll spot our new high. What happens there? The market broke the level of the next high to give us another high, okay. Then we'll spot our next high. What happened there? The market broke that level. The market broke that level to give us another high. So this is break of structure. It's what it means is, in a trending market, the market is breaking the existing high or the existing low to give us a new one. Basically what it is, almost like demolishing something that is already there to build a new one on it. That's just what it means. Break of structure. It just demolished the previous high to give us a new. Now in an uptrend, the market is targeting the highs, okay. It's like when you say this, they want to do redesign and remodeling of an area, and they say, okay, because of health or safety reasons, the houses that are more than 100 years old will be demolished. So that means those houses are the ones that are targeted. Now in the same similar instance, in an uptrend, what the market targets are the highs. The market demolishes the highs to give us new highs. That's what market targets in an uptrend, okay. Now let's break of structure to the downside, because what we just finished treating is the uptrend. Let's say this is the starting of the market. The market gives us a low, gives us a high, gives us a low, that is lower low, gives us a high, a lower high, gives us a low, a lower low, gives us a high, a lower high, gives us a low, a lower low, gives us a high, a lower high. Just the market just continues in this manner, okay. Now this is the structure that the market has developed, just like we spoke about in an uptrend, that in an up or down trend, the market demolishes targets to give us new prices, okay. Now in a downtrend, the target here becomes the lows. The market demolishes the lows or breaks the lows to give us a new low. We can see it here. Market comes down, gives us a low, okay, goes up, gives us a high, comes down, gives us a lower low, okay. We can see it play out again. Even though this textbook example, we'll see how it happens in real market. The moment you start spotting these things out, it becomes a lot easier to understand where the market is going, because when you see something like this, you can start preparing your mind that, okay, I think we're in a downtrend, because market has broken structure at least twice. You can now say, yes, I think we're in a downtrend, okay. So now in a downtrend, the market demolishes the lows. You can see the lows being taken out to give us new lows. Basically, that's what happens in a downtrend, okay. Now, as we have already stated, that in a ranging market, we don't get new lows, we don't get higher lows or higher highs, we just get market operating within a range. It might not be as perfect as what I drew, okay, it might not be that perfect as what I drew, but you'll be able to get an idea of what exactly is going on if you are unable to get a break of structure. Okay, like let me draw something that is more realistic for a ranging market. This is something that might be more realistic for a ranging market. You have market move like this, okay, move this way, move this way, move this way. Now, the mistake some people make is that at this point, they might come and mark it and say, we have a break of structure here. Okay, no problem. Let's say you call this a break of structure. Let's say for the sake of it, you call this a break of structure. Now, for you to identify and say that there is a trend, you need at least market to break structure at least twice for you to say, okay, there's a pattern that is forming. What happens next in the sideways market or ranging? The market goes up again, okay, comes down, goes up, comes down, goes up, comes down, goes up, comes down. Market will do this a lot of times. So some people see this and they get confused. They don't know what to mark again, because do you call this a break of structure? Where is it breaking to? Do you get? Do you call this a break of structure? Where is it breaking to? So at this point, people get confused. They don't know what to do. They don't know how to mark it out, because they had believed that we were having a break of structure to the downside. And sometimes you might even have two. You might even have two within here. Let's say you might even have a few more within here. But the main thing is, if you're able to spot these things, it will be a lot easier for you to deal with the confusion. Okay, so the next thing is change of character. Change of character. Or COC church. Change of character or COC. Some people like to call it different things. They'll say CH or CH. I don't think it's necessary. It's just whatever labels you decide to give it. It's you are in the market. I use COC because it's just straightforward. COC, then break of structure, BOS. Some people call it market structure shift. Again, I think it's just personal, but try and simplify things for yourself. Market structure shift it looks bogus. Just saying that the market has changed character. Change of character. It's straightforward. Okay, so what do we mean by change of character? We have established that characteristics of a trend, for you to say this is a trend, it has to move in a certain way. Characteristics of the trend is that you notice highs and lows, and these high and lows are moving up or down or sideways. So those are characteristics of a trend. Okay, so when you notice something out of place, this trend was moving up. It was moving up. I was seeing it. We were getting higher lows and higher highs. All of a sudden, we'll stop getting higher lows and higher highs. It means that the characteristics of that trend that you just spotted have changed. hence change of character. In the same vein, you can say, okay, I was noticing a downtrend, and prices were giving me lower lows and lower highs. All of a sudden, I'm getting higher highs and higher lows. It means that the characteristics of that downtrend you notice has changed. Now, when the characteristics of that trend you notice has changed and is now developing characteristics of a different kind of trend, you can now say that we have moved from this trend to this trend. It's important to spot places where change of character occur, because it gives you an idea of where direction of the market. If you notice, if you are seeing a downtrend, and let's say we are seeing a downtrend, okay, we're seeing a downtrend, lower lows and lower highs, you can say the market is bearish, and you'll be right. Then the market decides to give you something like this. It's no longer lower lows and lower highs. You just noticed it that, okay, the market has given me a higher low and a higher high, and the market has done it again. Now, from what we have just discussed, it's easy for you to spot a downtrend, because this is it. You have a break of structure. I have a break of structure to the downside. Okay, that's nice. I have another break of structure here to the downside. Okay, we'll say we are in a downtrend. Let me change the color of this. We can happily say that, yes, let me use red. We can happily say that in a downtrend, the lows are targeted, and we are taking out the lows, and it's nice. Everyone is happy. Okay. Yes. We are taking out the lows, and everyone is happy. And you keep on marking your break of structure. Okay. You mark your next break of structure. Now, we said that in a downtrend, the lows are targeted. So you mark your next one. Why do you always mark your next lows in a downtrend or in any trend that you have noticed? Because ideally, what should happen for the trend to still be valid is that price was supposed to do this. Okay, price was supposed to do this. This was what price was supposed to do, so that this becomes a valid break of structure. But price didn't do that. In fact, what price did was, this was what price did. So this did not break structure. You are like, okay, you're still observing the market. Then you notice that this low was taken out. In a downtrend, the lows are the target. The lows are what gets broken. Okay. What you now notice is that the highs now that are usually protected in a downtrend was now targeted and taken out. Okay. So this point that you just noticed, this point that wasn't supposed to happen becomes something, change of character, because it's not in the character of a downtrend to take out the highs that are supposed to be protected. This on its own becomes what? A change of character. You're like, okay. After a change of character, what you need to now confirm that, okay, I think that we have changed from downtrend to uptrend, is a break of structure. Because sometimes the market moves strange. The market might give you a change of character, yes, and then comes back here. It happens. Market might give you a change of character and then comes back here, and you see people, they become confused. They ask themselves that but market is not supposed to do it. There are a few things market does what it wants. So that's why you have to be careful when you are studying. Market does anything it wants. Nobody's stopping it from doing what it wants to do. But when it's doing what it wants to do, you have to understand what is going on. Why is he doing like that? Okay, so there's nothing that stops the market from doing this. When it happens, you see some people will come here and say, okay, that is valid break of structure. They still believe that they are in a downtrend, or they don't care. They say that this break and this change of character is invalid and all those things. In market is very important. Trading is very important that you're patient, so you understand what is going on. Okay, so let's take this out. Let's continue with what we have. So when this thing happens, we start noticing that the market has started targeting the highs, and the only things that are targeted in the highs, it's only in uptrend that the highs are targeted. Okay, so now another thing that is of importance to note is that any low, okay, another thing that is important to note is that in trends we have what we call strong low and strong high. Okay, and let me take this out. We have what we call strong lows and strong highs. These are the lows and the highs that are protected in a trend. So if we are in an uptrend, the lows are what are protected. If we are in a downtrend, the highs are what are protected. Those highs are not targeted, they are not demolished. And let me give an example so it doesn't look so bogus. This is an uptrend. Okay, now price doesn't come down here to demolish this, you get, because it's protected. Price may come as low as close as this, and then as long as the lows are protected, it's a very valid uptrend. Okay, it doesn't matter if price comes this low and goes up again. If price does this, then this low has been violated. Okay, then you can now start considering a change of character. Now there are other characteristics that you have to put together with what you already know about trend for you to become convinced that these lows are meant to be protected. One of those characteristics is a break of structure. Okay, any low that leads to a break of structure is meant to be protected. In the same vein, any low that leads to a break of structure is meant to be protected. So that means this becomes a protected low because it led to what broke the previous structure. Okay, now you're able to spot a break of structure in the market. Okay, what will now make you say this is a change of character is when a protected low, a protected high is taken out. How do we know a protected low? Any low that leads to a break of structure is a protected low. If the market does something like this, you can only then call this a change of character because this low is meant to be protected. Why do I say this? There are instances where the market just forms some kind of trap and people fall for it. You see something like this, the market does this, okay, does this, and then continues. You will see some people will come and say, okay, that here is a change of character, that in an uptrend the low is supposed to be protected, and because of that, because it wasn't protected, that the market has changed character. But the thing is, it's not supposed to be protected because it did not give us a break of structure. If it broke structure and it was taken out, then we can just say, the market has changed character. Do you get? Now, this low here was what gave us this high. It's not this low. It was this low that gave us this high. It was this low that gave us this high, and not this low. So you would expect this low to be protected. You expect that this low is protected. So even when you see price coming down here, all your mindset is that yes, this is going to be protected because it was the one that gave us this high. Where you start becoming, when you might now start changing your bias, is when something like this happens. So only when that happens does this become a valid change of character, because you know that a strong low in an uptrend is meant to be protected. So when it's not protected, you can now say, okay, market has changed character. You get? Now, what do you now need to confirm that yes, we are now in a downtrend? Is after a change of character, you now get a break of structure in the direction of the new trend that you have spotted. This now you can now say we move from an uptrend to a downtrend. Okay, so I think this is taking a lot of time, and let me just go to the markets and show you an example. I didn't want this video to be more than 30 minutes. It can be very distracting to learn something for more than 30 minutes. Okay, I've spotted something very interesting here like this. We spoke about sideways market. This is a very perfect example of a sideways market I spoke about. Okay, this is a perfect example of a sideways market. You can see that within this range, it was giving us some lows. Look, someone now come and say, okay, since we have the first low and we have a lower low, that we are now in a downtrend. Do you get? But that is not it, because what happens with the next low? The next low is still within a range, and so it's easy once you know what to look out for, how to spot it. It's easy for you to spot it. Okay, so basically, let's spot I want to use something that's from an okay, I've seen it. I've seen what I'm looking for. So let's start from here. Okay, let's start from here. Let's assume that market started from that point. You have your low, and then market does this. You mark here as your break of structure. Okay, you mark there as your break of structure, which is fine. Then in that break of structure, you notice another one here. This is another one here. So you mark here as your, it's meant to be protected. Let me just do this one so that we don't have complications. Basically, that keeps on happening. As you can see, it keeps on happening. We are going down, trying to rush this video, but if you practice on your own, you'll be able to get this. Keeps on happening. We are going down, the lows are protected, the highs, sorry, this is a downtrend, the highs are protected. As you can see now, break of structure, we have your pullback here. Sorry, have your pullback here, okay, which you can see is protected. It wasn't taken out, basically. So that keeps on happening until here. Now remember that I said when we are in a downtrend, it will aid you for you to mark where the next break of structure needs to happen. So when that happens, you can now spot it. But if you see what happened here, you can't call it a break of structure because the structure wasn't broken. It was a sweep. You need a full candle close beyond this point for you to see a break of structure. Look at all these ones in the past. You need a full candle close beyond this point for you to say it's a break of structure. So this is not a valid break of structure. If you look at it, it was a sweep. What happened there? Just came, swept it, and then didn't break. Okay, so we delete it. Now, what gave us the last break of structure? We can say that here, even though it's a stretch, we can say that here was where we had the last break of structure. We can say that this was where we had the last break of structure. And if that is the case, the lower high there becomes this one, becomes this point. Okay, the lower high there becomes this point, which is fine. We can all agree on that. Now, the lower highs in break and downtrends are meant to be protected. But what now happens next is that when this one failed to break structure, we are still waiting for it to break structure because we believe that the downtrend will continue. We are not trying to tell the market what to do. We are looking at the market and observing how it's behaving. When it failed to break structure, we say, okay, this is meant to be protected, but it wasn't. Market took it out. When market took it out, at this point becomes what? Your change of character, because it's supposed to be a strong high because it created what broke the structure here. Okay, so at that point, market took it out. That's fine. Change of character. Now, for us to confirm that we are in a new reverse trend from downtrend to uptrend, we need a break of structure. That's what we said, a break of structure to the upside. Okay, so what do we have here? We have our break of structure. Have our break of structure to the upside, and here becomes a protected low because it gave us the break of structure. Okay, fine. Now, when I told you that the market behaves in very funny ways, you cannot predict for it what to happen. The next thing is that some people will now come and mark here. They'll mark here because, okay, we expect market to break again, which is fine. That is what market is supposed to do if we are in an uptrend. But what now happens? The place that you're supposed to be protected, market comes and takes it out again. At this point now, you mark it. Okay, at this point you mark it because this is not supposed to happen. This is a change of character. For you to now confirm that we are now in a downtrend, because market can change direction multiple times the way it likes, we need our pullback, which becomes this, and then we need the market to break. Let me clean this up so that it doesn't confuse us. we need the market to break here, because we have gotten our pullback. Here was supposed to, this point here was supposed to be the protected high in a downtrend, because from what we have seen in this change of character, we believe that we are now in a downtrend. Okay, so we need markets to now break. What would have happened for us to say we have continued our downtrend is for market to come here, break it, give us a pullback, continue. But sadly enough, I won't even say sadly enough, just the way market does, that didn't happen. What happened again is that now this point that gave us the break of structure, this point here that gave us the break of structure was supposed to be protected. Okay, but what market now did is that market pulled back. What market now did is that market went this way. Market went this way. Okay, came down here, gave us a change of character. We're expecting this to be our protected pullback and give us a break, but that wasn't what market did. Market did this, came and market came and took this one out. Now, from what we were saying before, if this particular one did this, then it becomes a protected low because it broke structure. But it didn't break structure. Okay, it did not break structure. So when it took it out, it doesn't really matter. It's not a change of character for us. This is the last valid change of character that we know. This one did not break anything, so we won't say we have changed character. Okay, we just kept on watching the market. Now what now happens is that market comes back and goes here. Okay, so now at this point, this is a strong high. This now becomes our new change of character. I know it's confusing, but if you just study it, understand the characteristics of a trend, and it will be easier for you to mark it out. This now here now becomes our new change of character to the upside. So what we now need to see is a pullback, which now becomes our protected low. And if it only becomes our protected low if it breaks structure, which it did. So this is now break of structure. Okay, now we need it to be protected. What then happens? Market pulls back a bit, and gives us a break of structure. Pulls back a bit and gives us a break of structure. Now, even if you don't know how to spot a trend, this, when somebody draws this kind of thing for you, what will you call this? This is an uptrend. Okay, this is an uptrend. So now it's easy for you to spot your change of character if you understand the characteristics of a trend. Okay, so you just have to practice this. There's no rush. You just understand what you're doing, practice it, and when you become better at it, you'll be able to spot what market is doing, what direction market is going to. By spotting what market is doing and direction, it will be easier for you to know where to trade. Now imagine that we are in an uptrend. Okay, we are in an uptrend, and you know that in an uptrend the lows are protected. This is a low in an uptrend. You know that this will be protected because it gave us a break of structure here. Okay, now even if you decide for some weird reasons, you decide to sell from somewhere here, let's say you saw this candlestick and you were convinced that we are selling. Even if you decide to, knowing that this is a strong low, why will you come and put your take profit here? Do you see why it's important for you to understand market structure? If for some weird reasons that you decided to sell from there, why would you? In fact, here too is a strong low. Why would you even put your stop loss here when you know that this is a strong low here? That is a strong low here. This becomes a strong low. Why will you do that? If you even decide to sell from there for some strange reasons, this might be what you would do. And somebody will say, okay, to an extent, you understand market structures. That's why it's very important to understand market structures. Okay.